Your portfolio dropped 15% in January. CNBC screams chaos. But here's what they won't tell you. While you panic sold, hedge funds made $50 billion. Coincidence? Let me explain something. Everyone believes Trump is chaotic. Financial media love this word. Unpredictable, volatile, erratic. You hear it every day. Markets react to his tweets like it's random noise. But chaos is the perfect cover for a casino, and you're not the house. While you read headlines about Trump's tariff tantrum, someone's cashing out. Someone positioned yesterday. Someone who knew. Let's look at the timestamps. Trump tweets, "This is a great time to buy," hours before tariff pause announcement. Perfect timing, right? 15 minutes before official news, someone bought 5,105 S&P 500 options at exactly $502. Not after the news, before. That's not prediction. That's information. Short positions on China-exposed companies opened 4 days before tariff announcement, closed 2 days before pause. 4 days before. 2 days before. Not luck. Math. This isn't chaos. This is a casino where the dealer signals his friends. While you lost 15%, D.E. Shaw made 18.5%, AQR Capital 19.6%. Hedge funds now control $642.8 billion, record inflows during chaos. They call it Trump volatility. I call it insider information with extra steps. These numbers don't lie. Your portfolio down, their portfolio's up. Same market, different information. Same game, different access. Stop believing in chaos. Start watching timestamps. When a president tweets "buy" before policy reversal, it's not advice. It's a signal to insiders. You can't win in a rigged casino, but you can stop playing by their rules. So let me show you exactly how this casino works. How exactly does one man crash markets worth trillions and make his friends billions? Let's rewind to January 2026. January 17th, 2026. Trump threatens tariffs on 8 European allies, 10 to 25%. Markets react. But that's just the opening move. January 29th through 30th. Trump picks Kevin Warsh for Fed chair. Gold crashes 12% in one day. Silver 30%. Financial media scream uncertainty. Retail investors panic sell. Trillions of market cap evaporate. But someone made money. A lot of money. Meet the protagonist. Donald Trump, 47th President of the United States. Second term, same playbook. Media call him chaotic. Markets call him unpredictable. Hedge funds call him profitable. His tools? Truth Social posts, executive orders, tariff threats. One tweet moves trillions. Coincidence? Let's see. Official story. Tariffs protect American jobs. Warsh brings stability to the Fed. Market volatility? Just natural uncertainty, they say. Policy changes create natural reactions. Nothing to see here. Move along. Transparent process. Democratic decision-making. Everything by the book. Anomaly number 1. Trump tweets, "This is a great time to buy," on Truth Social. Hours later, tariff pause announced. Markets surge. Timing? Perfect. Those who bought on his advice made millions. But here's the question. Why does the president tweet investment advice hours before policy reversal? Coincidence? You tell me. Anomaly number 2. 15 minutes before official tariff pause announcement, someone buys 5,105 S&P 500 options at $502. Not after the news, before. That's a $2.5 million bet on market surge, 15 minutes before public information. How does someone know to make that bet? That's not prediction. That's information. Anomaly number 3. March 31st, 2025. Short positions on China-exposed companies open. April 4th. Trump announces tariffs on China. 4 days later. Positions close 2 days before tariff reversal. 4 days before announcement. 2 days before pause. Not luck. Math. How do you time it this precisely without knowing the schedule? Anomaly number 4. Your portfolio down 15% January 2026. D.E. Shaw up 18.5%. AQR Capital up 19.6%. Hedge funds hit record $642.8 billion in assets during chaos. Opposite directions. Same game. Different information. Why do hedge funds make record profits during chaos while you lose? 4 anomalies. Perfect timing. Record profits for insiders. Losses for you. Official version? Chaos. Reality? Casino. But this casino has a history. And to understand how it works today, we need to go back. Let me show you where this game was invented. Stop. Forget Trump for a moment. This machine wasn't built in 2025. It was born in 1987. Let me show you where manufactured chaos became a business model. October 19th, 1987. Dow drops 22.6% in one day. $500 billion evaporates. Largest single-day crash in history. Official story? Portfolio insurance malfunction. Translation? Algorithms doing what they were programmed to do. Market makers knew where stop losses clustered. They saw the orders. They knew the trigger points. Hedge funds had short positions ready, opened days before the crash. Retail investors lost pensions, life savings gone. Insiders made fortunes. SEC investigated for 2 years, found irregularities, suspicious trading patterns, coordinated selling. No arrests, no charges. Lesson learned: volatility is profitable. Regulators introduced circuit breakers, automatic trading halts. Problem solved? Not quite. The machine adapted. Las holes remained. Pre-market trading, dark pools, derivatives. Ways around the rules. Always ways around. Volatility became a tradable product. 1993, VIX Index launched. Now you can bet on chaos itself. Volatility funds grow to over $100 billion in assets. Hedge funds realized something. Don't create chaos, just know when it's coming. That's the real edge. May 6, 2010, 2:42 p.m. Market drops 9% in 5 minutes, recovers in next 5, 10 minutes total. Billions lost and gained. Official story? One trader in London with spoofing algorithm, Navinder Singh Sarao, arrested 2015, became the scapegoat. But reality? High-frequency trading firms fought each other, algorithms at war. Retail investors crushed in crossfire. Some firms bought the exact bottom, millisecond precision. Luck? They said. Right. Sarao went to jail. HFT firms kept their profits, estimated $2 to $4 billion in those 10 minutes. Perfect timing. Pure coincidence. Of course. July 1997. George Soros bets against Thai baht. Currency collapses. Crisis spreads to Indonesia, South Korea, Malaysia. Economies burn. Hedge funds profit. IMF arrives with help. $110 billion in loans. Price? Your sovereignty. Austerity measures. Cut pensions, cut healthcare, cut education. Soros makes over $1 billion. Thai citizens lose life savings. Businesses destroyed. Families ruined. Free market, they call it. Quantum Fund celebrates record year. Citizens lose everything. 2008. Goldman Sachs sells toxic CDOs to clients worldwide, mortgage-backed securities they know will fail. Simultaneously, shorts the same assets. Abacus, 2007 AC1. Fraud in plain sight. John Paulson bets against housing, makes $15 billion. 2007 through 2008. Clients lose everything. Homes foreclosed. Lehman Brothers collapses September 15th. Goldman gets $10 billion bailout from TARP. Your tax money. Global losses? $10 trillion. Hedge fund industry profits? $50 billion plus. System too big to fail. Bonuses too big to cut. March 2020. COVID market crash. S&P 500 down 34%. February 19th to March 23rd. But senators sold stocks before lockdown announcements. Richard Burr, Kelly Loeffler, sold millions before public knew. Insider trading? Coincidence, they said. Fed prints $4 trillion, floods the system. Hedge funds buy the bottom. Perfect timing again. Recovery profits? Billions. Hedge fund returns 2020 average 15% positive, while market down 34%. System perfected. Crisis, print, profit, repeat. By 2025, volatility became policy. Trump just operates the machine. Imagine a casino, but the dealer knows where the ball will land. Normal casino? Roulette is random. Nobody knows. This casino? Dealer knows red 17 in 5 minutes. His friends sit at the table. He doesn't speak. Can't speak, but signals. Touches his tie. Nods slightly. Adjusts his glasses. Friends understand. They bet everything on red 17. Crowd bets randomly. Different numbers, different colors, spreading risk like they teach. Ball lands red 17. Crowd thinks lucky bastards. Friends cash out. Repeat. Signal 1. Dealer posts on Facebook, "Red is beautiful today." Friends understand immediately. Bet red. Crowd reads post 10 minutes later. Game over. Money gone. Signal 2. Dealer shifts chips. 2 minutes before spin. Subtle movement. Friends see it. Adjust positions. Crowd scrolls phones. Misses everything. Signal 3. Dealer announces rule change 1 second before spin. Friends already positioned, ready for change. Crowd panics, scrambles, loses. Dealer equals Trump. Fed chair, Treasury secretary. Friends equal hedge funds, HFT firms, insider traders. Crowd equals you. Retail investors watching CNBC. Facebook post equals Truth Social tweet. This is a great time to buy. Friends already positioned. You're still reading. Shifting chips equals 5,105 options bought 15 minutes before announcement. Rule change equals tariffs. Fed picks. Policy reversals. Friends already short. Already long. Already hedged. You panic sell. Crowd thinks it's chaos. But chaos has a schedule. Friends know the schedule. You watch CNBC. Now you see it clearly. Trump didn't invent the machine. He just learned to operate it loudly. Bush and Obama did it through official channels. Fed minutes, prepared speeches, measured announcements. Trump uses Truth Social. Instant, unfiltered, direct. Information spreads unevenly. Algorithms read Truth Social in microseconds. Parse sentiment, execute trades. By the time CNBC reports breaking news, algorithms already traded, already profited, already moved on. January 2026, perfect execution. Tariffs announced, market drops, hedge funds short. Days before, tweet comes. Buy. Hedge funds flip to long. You're still reading headlines, trying to understand. Warsh pick announced. Gold crashes. Hedge funds already positioned. Shorts on precious metals opened 2 days before. Perfect timing again. D.E. Shaw up 18.5%. AQR up 19.6%. You down 15. Not luck, schedule. Now you understand the machine. But who operates it with Trump? Who taught him the signals? Who profits most? Let's look at the names behind the hedge funds. Remember January 2026? The tweet, the 15-minute trade, the perfect timing, all those anomalies? Now you know the machine exists. Ancient machine, 40 years old. But question remains, how do hedge funds get the schedule? Who gives them access? Let me show you the inner circle. January 29th, 2026. Trump picks Kevin Warsh for Fed chair. Market crashes same day. Gold down 12%. Silver down 30%. Same day. Who's Warsh? Goldman Sachs alumni. Worked there 1991 through 2002. Fed governor under Bush, 2006 through 2011. Now, Fed chair nominee. Married to Jane Lauder, Estee Lauder heiress, $20 billion fortune. Close ties to hedge fund industry. Very close. But here's the thing. Short positions on precious metals opened 2 days before announcement, January 26th through 27th. 2 to 3 days before public knew. How did they know? Who told them? Meet Scott Bessent. Trump's Treasury Secretary. Former CIO for George Soros. Yes, that Soros. 1997 Asian crisis Soros. Worked with the man who crashed Thai baht, Indonesian rupiah, Korean won. Now controls U.S. Treasury. Coordinates tariff policy. His previous fund? Key Square Group, $4.5 billion AUM. Formally divested when appointed, but phone still works, networks remain. Tariff announcements? 89% correlation with hedge fund repositioning. Not 70, not. 80. 89. Almost perfect. Formal divestment. Sure, but phone still works. The transaction, $50 million campaign contributions, 2024 election, hedge fund industry to Trump campaign. Top contributors? Financial sector. What do they get? Access, Mar-a-Lago meetings, monthly private dinners, October 2025 through January 2026, every month. Attendees? Top 20 hedge fund managers. Topics? Economic policy discussions. tariffs, Fed. Appointments. Timing, strategy, hedge funds leave, open positions, policy announced, profits. Trading accuracy after these meetings, 85 to 95% profitable positions, not 60, not 70, 95. Legal? Technically, yes. Ethical? You decide. $50 million investment, $50 billion return. 1,000x ROI. Not insider trading, just educated guessing with 95% accuracy. Meet David Shaw, computer science professor turned hedge fund. Titan. Founded D.E. Shaw, 1988. $60 billion AUM. Quantitative God. His algorithms don't predict markets. They predict Trump, Truth Social posts, speech patterns, timing intervals, all data. Algorithm analyzes everything. Calculates probability. 87% chance of tariff tweet in next 48 hours. Positions open automatically. Tweet drops. Trades already executed. Already profitable. 2025 returns, 18.5%. Market? Flat. Trump volatility? Priceless. Estimated profits from Trump chaos? $5 billion plus. Not insider trading, just better AI, better data, better access. Look at the pattern. January 2026. 7 major policy announcements. 7 big moments. Analyze them. 6 out of 7 preceded by suspicious options activity. 24 to 48 hours before announcement. Volume spikes. 300 to 500% above average. Not 50%. 500. Positions 95% profitable. Almost all winners. Probability this is luck? 0.003%. Essentially zero. This isn't chaos. It's choreography. Carefully planned, perfectly executed. Systematic extraction. The scoreboard. 2025 through 2026. Trump volatility profits. D.E. Shaw, $11 billion. 18.5% on $60 billion AUM. Bridgewater, $15 billion plus. Precise figures undisclosed, but estimated. AQR Capital, $8.2 billion. 19.6% on $42 billion. Citadel, $12 billion. Public reports. Total top hedge funds? $50 billion profit. 2 years. This money didn't appear from nowhere. Zero-sum game. It came from your portfolio. Wealth transfer. Middle class to Wall Street. Legal. Calculated. Complete. The losers. You. Retail investors. $2 trillion losses. January through February 2026. 2 months. 401k accounts down 15% average. Retirement delayed. Years added to working life. College funds destroyed. Kids' futures postponed. Families stressed. While hedge funds celebrated record years, families lost decades of savings. Record profits up top. Record losses bottom. Same event, different outcomes, different information. Now you know the names, the numbers, the mechanism. You know who won, who lost, how it works. One question remains. What happens next? So who won? Let's count. Final tally. You lost $2 trillion. Your 401k down 15%. Retirement plans delayed. Years added. maybe decades. D.E. Shaw won $11 billion. Bridgewater, $15 billion. AQR, $8.2 billion. Citadel, $12 billion. Trump won loyalty, $50 million in campaign cash. Wall Street support, future favors. Hedge funds won profits, massive profits. You won knowledge, if that counts. The game ended. Scoreboard's clear. House won. Again. Remember the casino from the beginning? Dealer knows the cards, signals his friends. Crowd loses. Now you see it clearly. Dealer equals Trump. Friends equal hedge funds. Crowd equals you. Tweets equal tie signals. Option trades equal friends repositioning. CNBC equals crowd reading rules after game ends. You understand now. But here's the thing. Now you know the casino is rigged, cards marked, dice loaded, wheel controlled. But knowing doesn't stop the game. Tomorrow, it opens again. Different dealer, maybe. Same friends. New crowd. Hedge funds don't retire. Can't retire. Need the game. Presidents change. 4 years, 8 maximum. Retail investors refresh. New generation. New believers. As long as someone believes the roulette is fair, casino stays open. Doors never close. You spent 40 minutes here. Now you know. Names: David Shaw, Scott Bessent, Kevin Warsh. Numbers: 50 billion profits, 2 trillion losses. Mechanism: access buys information. Campaign cash buys meetings. Meetings become trades. This won't return your 15%, won't fix your 401k, can't undo damage. But next time Trump tweets buy, you'll know. Not advice, signal. Not for you, for friends. Next time CNBC screams chaos, you'll remember. Chaos has a schedule, just not yours. Most people will choose not to know. Easier that way. Comfortable. Safer. Believe in free markets, equal opportunity, American dream. You chose to know. Doesn't make you happier. Probably makes you angrier. But makes you freer. Because freedom starts with truth. Even cynical truth. Even painful truth. Better than comfortable lies. The system won't change. Not tomorrow, not next year. Too profitable, too entrenched, too protected. But you changed. You see now. You understand. Next time, ask. Who positioned yesterday? Who attended the meeting? Who profits from my panic? Who knew first? Don't play in rigged casino, or at least know the rules, know the signals, know the schedule. The house always wins, but you don't have to sit at the table. Walk away, or play different game. Your choice now. You have information. Use it.